All right, so first things first, if you guys haven't watched any of the previous trainings, it would absolutely help you long term to watch them. If you're not part of the YouTube channel or you're not part of the Discord, hit me up or ask questions and we'll get you an invite. The Discord is going to be the biggest place to get a lot of the information that you're going to get out of this. But anyway, so we're going to go ahead and get started. I'm going to read the disclaimer. This information contained in or provided during this live stream is not intended to be and does not constitute financial advice, investment advice, trading advice, or any other advice. The information provided during this training is provided for educational and informational purposes only. Any risks associated with the use of Marketscore indicator or data provided by Marketscore indicator are the responsibility of the user directly. I will actually Marketscore indicator or Marketscore, because of course we're now adding, I completely forgot about this, Marketscore Chrome extension or data provided by the Marketscore extension. Sorry, evidently I can't spell. All right, moving on. So really quickly, high level, I am going to go through some of the information about Marketscore just because I know that there's people that will not necessarily have the information handy or at least understand what Marketscore is. So I'm just going to run through it. I will go through it relatively quickly because we have a lot to cover to get to the extension, which is the crux of the majority of the pieces that I want to get through. So Marketscore, it looks like this. Originally started out like this. It's a holistic indicator that is based on data across the market. It provides visibility to buying and selling pressures to help you make informed decisions on different possible movements in many tickers. So far, I haven't found one that doesn't work. I just use the word many tickers because it's generic enough that if I do find one that ultimately that somebody could come back or can't come back at me and say that you said it would work for everything. Current functionality is optimized for ES, S&P, works with NQ, YM, Dow Jones, and the Russell. We are going to focus on, with the extension, we're going to focus on NQ and YM because those are the ones that work with the bot. I'll explain all of that as we get into it. So how does it work? So it captures data from multiple tickers across multiple data points, or using multiple data points of those tickers from across the market using the following. It uses directional data, it uses velocity data, quantitative data, derivative data. Oh, sorry, I just realized my YouTube streams are stopping. And that means that it's going to start trying to play YouTube streams. Okay, directional data, velocity data, quantitative data, and derivative data, which is a very fancy word of saying that it takes a lot of data, boils it down, and it generates an upside score and a downside score. I've had a lot of people ask me, why don't you just have one score? And here's the reason why. Can buyers and sellers be strong or weak at the same time? And the answer is yes. And that is crucial. If it was just one score, you would only know the cumulative, which would not be representative of what is actually happening, because sometimes you will see that the upside and the downside will both be moving in a positive direction or both be moving up. And that means that buyers and sellers are trying to become strong at the same time. And that is crucial to know because it helps you make better decisions. Because when that happens, maybe it's time to just wait a minute, versus if you're seeing them separate, meaning that you're actually seeing the downside move up and the upside move down, far easier to read. If both upside and downside are moving up at the same time, much harder to know whether or not one of them is going to win. This uses sector data. It creates a sector score to help provide context of movement, calculates trends and extrapolation of derivative data. Algorithm executes multiple times per second to establish the most up-to-date scoring. High and low scores provide potential visibility to market movements as the day progresses. So this is what this little teeny indicator shows. Now, you'll see the charts are fairly involved and have a lot of other data on them, but this is what Marketscore is. It's this chart and then this readout. The last 12 upside, downside. This tells you the last time there was a high, and then the number of new highs for each the upside, and then this one would be for the downside, number of new lows, and the last time that it made a new low. The chart has just an upside bar and a downside bar. Well, the other way around. This is the red one is a downside bar, and then an upside bar. It tells you the delta, which is just the difference between the two scores. If the downside, and this is an old version, I guess I need to update this picture. If the downside is on top, this number is negative. If the upside is on top, the number is positive. It also tells you the number of crossovers. Now, someone had asked me about this for a while back, and one of the things I realized is that it is helpful to know if there are a lot of crossovers, say in the last 5 minutes or the last 15 minutes or the last 30 minutes. It helps you to know how uncertain the market is. When it looks like this, nobody's looking at this chart going, I wonder who's on top. This is obviously downside is winning. But when you have 5 or 10 or 15 crossovers in the last period of time, it helps you to better make better judgments. The other data on the chart, the other data on the page, this is the sector data. This is market data. I'm not going to go through all the details on this, but high range lows. It also tells you which contract the page is using, and it tells you which model it's running. There are nine different models. There's an R model, which just means regular, which is the one that I created before I created the new models. And then NM1 through NM8. And I'm going to go into detail on what those are in a little bit. It also contains the news. When a news item pops up or is coming up, it will start a countdown telling you how long until that news item hits. It will turn blue, and then it will, if there's more items in the list, it will scroll for the entire list so that you can actually see all of the items that are in the news that are coming, in order for you to be able to make better decisions. And these are additions that I made probably in the last 6 months, is a sell zone, which is a pink line. Usually these are sell pressure, and a buy zone. And you'll notice that the majority of the buy zones are at the bottoms of a move. Like when it comes down, it picks up the blue and it goes back up. The pink ones, which again is the sell zone, is usually at the top. Now, is it always at the bottom and is it always at the top? The answer is no. However, based on market movements, it does its very best in order to try to find movements that are based on buying and selling movements. Those are what it is based on in order to be able to provide that to you. It's effectively showing buying pressure and selling pressure. They can work independently, and there are times when a buy zone will end up closing a sell zone and vice versa, but it's just important to know what they are and how they work. Okay, so we're going to go through the different types of days. There are balanced days. They often start off mixed, and you can see how the scores on this day are relatively close. And then they spread out a little bit, and then we get a crossover, and then we get another crossover, and then we end up the scores are very close again. The number of highs and the number of lows are usually similar. It is not always the case, and a balanced day is more about how the day plays out from a pressure standpoint, not necessarily how the chart looks. This chart clearly is a balanced day, but there are times when a chart will move in one direction and still be a balanced day. It's important to keep in mind that the things to look at on the chart are not just what's on top. So just because the downside is winning or the upside is winning doesn't mean that it's going to go long or that it's going to go short. That is showing you the buying and selling pressure. It is not indicative of exactly the direction that it is going. So again, a couple of balanced days I'm going to show you. This is a balanced day. The scores are relatively even. I guess that was the one that was already up there. This is another balanced day. You can see the scores are relatively close. Not anything, and again, it started off where the lots of crossovers, and then it basically goes to a point where they were very, very similar. So then we're going to move back to the trend day. A trend day is usually when it goes in one direction and the strength is in one direction. And keep in mind, when I say strength, you'll see on the very last one, which is called a heavy pressure day, it often looks similar, but the numbers are usually significantly larger. And a trend day, you've all heard of what a trend day is. It's usually when the downside is on top and the trend is strong, but not to the point where it is overtly. So 23 highs, but only 3 highs on the opposing side. And let's do a quick look at the trend days. So this is a trend day. This is the trend day you already saw. This is another trend day. Again, it basically starts and moves up and doesn't ever look back. It gets really high up there. This is also potentially, this one would be a high pressure day and a trend day, and part of that is the fact that it has 35 new highs. So now we're going to move on to the high pressure days. High pressure days, very similar. The main difference is the number of new highs. So this one looks, sometimes you would look at this and you would think that it was a balanced day because it does come up and then it comes back down and gets very near to the open. But the amount of pressure to the one side is substantial. And uh, the high count on the opposing side often doesn't increase past the 90-minute mark. Often there's a spike toward the low or the low count side at some point during the day, which in this case, it goes up and then it comes back down. It comes back down. It comes back down a couple times. And then again, we're just going to go through a really quick example of this. This is a heavy pressure day, 39 new highs on the upside. It does look very similar, but you can see toward the end of the day, it starts to not really make up its mind. It's basically both high and low on top. Whereas on trend days, you'll notice that they're actually separated at the end of day. There's a separation between the two. That is the difference between. So this was partly a high pressure day just because it had so many, or I guess it was this one, had so many highs and lows, but it still ends with the trend being very clear at the end of the day. High pressure day, they go back together. Again, not an exact science. It just has to do with the number of highs. And when you get to that number of highs, that's what is indicative. And this one would also potentially, I mean, in a fair level of speaking, would be a trend day, but it doesn't really make a full move down, which is why I'm not putting it in a trend day. I'm putting it in side pressure. Okay, so back to here. So the other three things that show up on the chart are what are called gap zones. And you saw it on, I can't remember which day it was. Anyway, there was a one with a gap. When the market opens above or below the high or the low of the previous day, it will add this yellow section. That will be between the open and the high of the day. And it will try often enough to fill that, meaning that it will chew through that until it reaches the level. Or I guess I should say if it's going for a gap fill. There are a thing called Brad prints. Now, Brad prints are a little bit different, or single print. Well, first we'll start with single prints. Single prints have to do with what's called a TPO chart. If you look at, we'll do this with a trend day because that'll be easier. On a trend day, right between this B and this D, you can see that C has some space that doesn't get touched. That is called a single print. Now, the reason why single prints are helpful is it is often a magnet. It will often pull the price back toward it. So if it is getting near it, it is not uncommon for it to actually hit those levels. So it is the reason why I have it on there is because it keeps it in mind. In this case, actually, I take that back. There is no single print because the actual end of day closes that out. But let's see if the other one has it. And the other one does not. So I guess that we can't call that. So then we will go here. This one does not have single print. Okay, now this is a Brad print. So it's very similar to a single print. Now in this case, the market comes down, then goes back up and back down, and it keeps going over and over and over again. Now, this right here, where there is no candle right behind it and no candle after it. So there is an open space between, this is J period, then K period is up here, and L period does the move down. These right here are called Brad prints. They are similar to single prints, not quite as strong, but that is what the Brad prints are. And a Brad print, which currently does not actually do yet, just because I haven't added it, but at some point I will. I've added the code for it. I just haven't added the ability for it to track it, is a red zone. So you have the yellow zone, which is gap, the Brad print, which is red, and then the single prints, which are blue. And they will be across the entire chart. And you will be able to see them. And as it chews through them, they will disappear. So keep that in mind. And then we have the buy and the sell zones. We've already discussed this. So here are the different types of trades in the Marketscore models. So there is a 200 long. So, and keep in mind, these will all be consistent even through the different models. So a 200 will always be a long. A 201 will always be a short. 202 will be a long. 203 will be a short. No matter what model it is, they will be consistent. The difference between the models for these trades is the amount of heat that they can take, the amount of profit they are looking for, and then the difference in the score that they are looking for validation of getting in. This covers the when you see the different trades, and I don't know how many of you are in the Discord, but when a trade pops up, if I say a 200 trade, it is always a long trade. And again, the reason why I have that separated out is because this is the parameters upon which it gets into that trade. It is consistent across the board. There is one variant, and I will explain that as we get into the actual model. So the trade numbers are consistent, but there is a small variant. Okay, now these are the models. Now, the R model is the regular model. I'm not going to go into detail just because there's not really a whole lot to really cover, other than the fact that it trades and it trades based on market score data. It is primarily driven by that. There are exceptions, but for the most part, it is the market score data that drives what that is and how it actually decides to get in or out of a trade. And then now we're going to go through the new models that I've created. So NM1, this model was the first model that I created. Essentially, I went through the data and I created a trade model and then ran the data using my back testing. And I'm going to get into this in just a moment. But the back testing data or back testing page is where it actually goes through and it pretends that it is trading the entirety of these dates for every single day and tells you what trades it would have taken and what those results would have been for every single trade or every single day in the list. And I'm going to run that for you in a little bit. I set it up and I did a 30-point stop and 30-point take profit and ran it. And at the end, it came out profitable. So I kind of just sort of ran with that because I was trying to sort of get things in place. And so that effectively made my NM1 model. NM2 was where I actually went through and realized that there were times when it could have gotten in again after it had already taken a trade, and it wasn't. And so I created basically the 204 and 205 trade. NM3 is an optimized version of NM1, still only using the 4 trades. NM6 is NM2 with optimized across the board for all the trades. Then I went through and I looked at how it was getting into the trades, and I wanted to find a way to minimize the drawdown. Now, when it takes a trade, there's no amplitude of how much it decides whether it wants to take the trade or not. Either the data says yes or the data says no. In the NM5 through NM8, I went through and I looked at when it was getting into the trade, and I actually derived whether or not the data was strong enough in order for it to get into the trade on multiple counts. For NM1 through NM4, it's only looking at the market score data from a strength standpoint. And then the rest of the data is either off or on. There is no variance. For NM5 through NM8, there is strength indicators for multiple pieces. So it is actually looking at multiple items in order to determine if it should get into a trade. Again, it's simply NM1 through NM4 with that extra validation across the board. So it's nothing fancy. The reason why I called it NM1 was just because new Model 1, and then of course it carried through and it just sort of stuck, and I just haven't changed it. So again, all the 200 trades are across the board. They all use the same data. These 4 do have that small variant, but it uses the same core data and to determine if it should try to check the trade, and then it adds the additional validations to determine if it should actually get into the trade. And that's why you will see sometimes, if you're ever in the stream, there are differences between the NM1 trades and the NM8 trades, is because NM1 is very, very loose. It is significantly easier to get into an NM1 trade than it is to get into an NM8 trade. But again, and I'll explain exactly what that looks like and why. So this is the NM1. It's the 200 trade. Well, the 200 trades are 30-point profit, 30-point stop loss. The trade time, all of the models are currently based, and I haven't gone through and re-optimized NM4 through NM8 for the times, but because 9:30 to 12:30 Eastern worked, I decided it was easier just to roll with this and go back to it and worry about whether or not I could optimize it better later. So the bots only trade from market open and then for 3 hours, and that is it. And then from that point forward, it no longer takes trades. If it is in a trade, it will stay in, and it will stay in until the end of day. But the model itself is set to only take trades only get into trades up to 12:30. The trade size that I have typically is 1 to 3 micros. I do have some bots that trade 5 micros, and it's a long story, but I created a lot of how this actually works before I built the spreadsheet. The spreadsheet is kind of the crux of what it is that you guys are going to really, it's going to be jaw dropping. It opened my eyes to whether or not 1 to 3 micros was a smart idea or a bad idea on some of those higher level accounts. Rule number 4 is to watch the upside and downside in order to determine if there's confluence. The focus trades are what the old model did, but for now, we're just going to leave that alone. So the color coding. So a regular trade, it gets in, and it looks just like this. There's nothing fancy about it. It tells you, you'll know which model it is based on what it shows in the chart. And it tells you the entry and how much heat it has taken. HBB stands for heat before peak. And what that means is how much heat it has taken before it reached the max level that it's showing. Now, when a trade gets in and it's green, that means that it has not, and it's kind of hard to explain, but essentially the way that I've written the models is that there is an amount of heat it will take before it will allow it to get into another trade, if that is what it is set up as. Or, so let's say, okay, so you have a 30 trade, so 30 points of stop loss, 30 points of heat. It will allow the trade to get in, and if it gets 30 points of heat, it will immediately get out of the trade, and it would turn it to red. Or I guess the original stop, even if it has already hit the profit target. So the red means that the trade is now closed. Now, with some of the other models, I've built it so that even though it is hitting the equivalent of where, because all the trades are equal on both sides, so even though it's hitting where the stop loss would have been, it is not calling it dead because, and it's kind of a long story, but essentially it creates the ability for me to have an equal number of trades for all of the times that I run it based on the numbers that I'm using in order to validate the trades. The key being is that it normalizes the data to say it's only going to take 20 trades across the dates that I'm using in order to validate what the profit percentages are. So it allows me to have a more flexible, well, a more honed in number when I create my optimizations. So when it hits target, when it hits the profit target, it turns green. Even if it goes negative on the NM4 through NM8 trades, even if it goes negative to the level where the profit got out, it might not change to red. And the reason why is because there are additional trades. So the 205 and 206 trades are triggered when it doesn't hit an exit, or what doesn't hit what the equivalent of the exit would be, even if it hit the profit target. I think that may be a little bit confusing. I guess you guys can ask questions about that after. But when it hits red, that means that it has hit what the exit is. Now it will go red for one of two reasons. Either it hit the stop because it didn't hit the profit target, or it hit the profit target and then it went far enough negative that it would have hit the stop. And what that means is that it will not open. That trade is now closed, meaning that you shouldn't take that trade, and that there would not be a 205 or 206 trade, which are only get in when the trade is still open. So now we're going to move on to the spreadsheet. And I realize I'm going very quickly, so I guess I need to ask before we move on to this, does anyone have any questions that I can answer? So we're moving on. So this is going to be the spreadsheet. So I built a spreadsheet based on all the data for the models. Now, here is where I came to. So right now for my bots, I run NQNM8 and YMNM4, and I'll show you why. All right, perfect. Okay, so here's the deal. So the way this works is it tells you which, if based on the models, you pick a date, and this has all of the dates between 2/18 of 2022 all the way through. It does not have yesterday's data. I guess I had not added yesterday's data yet. So it has through Wednesday's data. It will tell you how much the average, daily average of how much points per day it makes, what the days to recover. Oh, I guess it isn't quite. Well, we'll just scroll. And it tells you the max drawdown. Now, this is not the max drawdown over all the days. What this tells you is the max drawdown for the worst day. So this is the NM1 model. Remember, this is the one that I just sort of like put the numbers up and saw that it made money, and then I called it golden. In fact, let me show you exactly how that works. So I'll just show you the NM4. So this is the NM4 model. So essentially what it does is it will actually run all of these dates to determine where the profit would be, and then it will dump it on here, and I'll show you exactly how. This is just to give you an idea of how it actually runs to be able to get the numbers that we come to of determining how it would have done on certain days. Okay, so we're going to open up this one. Okay, so these are the trades that would have taken this day. So, and this is something that I run regularly, and I have it actually do it based on different levels of profit, different levels of stop loss, different levels of heat, and it runs all of the days to give me what is here. And I'm just going to quickly show you. So in this particular, well, we'll go to this one right here. Okay, so this trade right here, so we're going to zoom in. So this trade right here, you can see that it's getting in at the top, which this is a value area. So it's getting in right there at the top of the value area and then writing it down, and then basically it immediately gets out. So it gets out in 2 candles, which is kind of crazy. It gives me the ability of being able to actually go through and look at, so I mean, because obviously this means almost nothing to most people. You're going to look at that and go, how does that even work? This is how I'm able to actually do that derived understanding of how it does on a certain day in order to determine if I should change it, is I can actually dive in or zoom in and look at the specifics. And I actually have the ability, so let's just actually go back to that. I have the ability of looking at, you can see down here at the bottom where it's blue, it's showing me the low, open, close, high of each of the candles. It shows me the high, that of the open candle and the closed candle, so that I can see what data it was using in order to determine whether or not it should be getting into a trade or getting out of a trade, or whether or not it would have hit levels based on the trade that would be expected. So that's how this actually works in order to help me determine what models are effective and what models are not effective, which is how I ended up coming to where I came to. So I'm going to focus on these 6 models just because these are the ones that I've actually spent enough time on. So again, the way this works is that you have the daily average. So this is the NM1 model. So over all the days, whether it's profit, whether it's making money or losing money, it makes an average of 5.2 points per day. And it has, on the worst day, a negative 950 points of drawdown. Now that doubled, because this is based on the NQ, that double would be $1,900. In this case, you would only be able to run 1 contract on a 50K count. Now, what I've done is I've gone through and I've created this to actually update in real time based on the data for each one of these models. Now I'm going to turn on the 2 that I run just so that we can actually delve in and you guys can ask me questions that you want to get answers to. And I'll explain to you why I use these 2 models. It'll take a second. There's a lot of calculations. Essentially what this is doing is it's going through and it's calculating the daily or capturing the daily profit and then tracking it across this profit total for all the days from, so this one right here will show this day all the way through the end. This one will show this day all the way through the end. This one will show this day all the way through the end in order to be able to show you what the actual profit is. Now, this is the combination of these 2 models. So the NM1 had negative 950 points. This is negative 587. And the days to recover, this is kind of complicated to explain. This really isn't a number that you would really ever use, but essentially what this is telling you is that on the day with a negative number, how many days does it have to trade before it stops having any negative numbers? And that is the worst number that there is. And again, the majority of those is not that low, but at the same time, I just needed to get that in order to help me sort of calculate these out. So these are the 2 models. Now, the best model from a profit standpoint, and this makes a total of 8,015 points, or 15 and a half points from February 2022 until today. Again, this is the model blind or blanket. This model gets in and doesn't get out, either hits a stop loss or the exit. That's all it does. It doesn't have any, like, if you were to trade with this model, you would probably go in and move your stop loss or whatever. but this is just telling you what it would do if it blind trading. Now, the model that makes the most profit is the NM4 model. Here's the problem though. The NM4 model, again, has a drawdown that is high, and you'll see in a moment because it'll pop up. The daily average is about 9, which is good. So it's the equivalent of 2 models running, but the drawdown again is up in the I think it's the 900 or 1,000 level. I don't remember exactly off the top of my head. 918 points. So it's more. It's almost well, we'll say 350 points higher than playing these 2 models. Now, here's the reason why I chose those 2 models, is that the way that I have intentionally built this is to optimize the amount of time it takes in order for you to be able to qualify an account. Now, I don't know how many of you use Apex or use a profit firm, but the idea is to be able to qualify an account in the least amount of time in order for it to be optimal for you to be able to get your money out. Now, the other thing to keep in mind is that these numbers are based on what I would call minimal numbers, which means and so the way I worked this out is I went through and I looked at the max drawdown for every single day, and I took the minimum number of contracts. Right now it's based on a 50K contract, the minimum number of contracts that you could play and still qualify. And this is it's a long story, or it's a math phrase, but it's a floor number, meaning that this number is actually 2.6 dot something something something, and I remove the rest of it. But if it was 1.999999, it would say 1. So the fact that it's saying 2 means that it is always greater than 2. So the minimum number of contracts that you could play on a 50K account using these 2 models and never blow it based on the data that I have, or not, I should say 99.9% of the time not blow it, and still qualify it, you could run 2 contracts. That's what this number is. That's what this number is applying. Now, if you took all of these numbers, which is the minimum number of the minimum number of contracts based on, or I'm sorry, the maximum number of contracts based on the drawdown, and you put them in order, and then you took the 90 or the 75th percentile on these numbers, it would be a 3, which means 75% of the time you could trade with 3 contracts and still qualify the account. Now, if I change this to a different size account, it will show you the different numbers, and I'll get to that in a moment. But I'm going to just sort of run through this really fast. These are the 90th percentile numbers. Yeah, I also 90. Yeah, we'll say, even though this one is a 2 number, it still ends up going down to, if I put 90% in it, would show 2 contracts. But the point I'm trying to make is that the minimum is 2, so it's 90 to all the way to 99. So this is the 90th percentile number of contracts. So it would take 43 trading days to qualify this account using 2 contracts. But if you changed it to 3, obviously that number would come down. So now we're going to get into the quantification of the 90th percentile and then the 75th percentile. So this shows you the profit in points for every month since for all the data that I have. And then I quantify the profit for a single contract for 1 account. And then I extrapolate that up based on the number of 90th percentile contracts in order to equate the amount for each one of those days. And then I turn that into the average per month. This is actually the complete number. So this is based on if you had 5 accounts. The total of all of these for 5 accounts using 2 contracts, if you had started on these 5 accounts in February of 2022, you would have a total of $160,000, which doesn't necessarily sound like a crazy amount of money for 3 years. However, it would be you doing nothing. That's the key. That's the key with this. Is that this would be you just watching it do its thing and doing the trading for you. And then this is with a 100K account, 150K account, a 250, and a 300K. Now, these again are the 90th percentile numbers. These are the 75th percentile numbers, meaning that if you were just looking for a 70, and I would say, having done as many trades as or many accounts as I have, I can tell you I would be very happy with having a 75% chance of qualifying an eval account. I can tell you that my number is not. It is not that. It is not 75%. In fact, it is not even 50% because I'll just tell you, I learned a lot of bad habits early on. So anyway, point I'm trying to make is that this is the data. Once you reach a certain threshold, and this is the key thing to keep in mind, is once you reach a certain amount of drawdown, meaning let's say you had a $10,000 buffer, then there's no reason why you wouldn't just turn on the NM4 contract. Now, right now, with just these two, you have a 9.32 points per day, a 587 point drawdown. If you turn on the NM4, obviously the numbers are going to change, but you double your average daily just by turning on NQNM4. Now, how much buffer do you need? That would be a personal preference, but I can tell you that I will be, as soon as I get to $10,000 in one of my accounts, I will be turning in one of these accounts. I had done it in the other accounts, but um, the I will be turning on the NM4 in these accounts just to, um, you know, get it moving faster and better. And it's just a matter of how much drawdown space you have, because once you have that space, it's really a no question. Now, again, so if you started on 323, I'll show you what I mean. You can change the number of contracts and it will tell you. So let's say you changed it to 4 contracts. Not necessarily realistic, but again, I'm just trying to sort of give you guys an idea of what this thing is doing or what it's capable of providing you with from a visibility standpoint. You'll see that the days to qualify will go down. Oh, well, I guess it already did. So now you're at 21 days to qualify on 4 contracts. You just have to have the space, obviously. Oh, I'm sorry. I take that back. 10 days. 21 days must have been before. Oh, because I picked the day. And it's just, again, based on the day, there's certain profits that it makes and losses. So it only took 21 days on that day that I was picking, and it now switching it to 4 contracts only takes 10 days. So you could pass an account much faster or much slower depending upon when you took it. You can see that all the rest of them are much fewer days. I'm going to go to this really fast just to give you an idea. So the pricing on the extension, I'm just going to give you an idea. This is what I'm considering is that if you were to do 2 contracts on a $50,000 account, your average monthly income. Oh, pardon me. Wait, let me do this. Let me switch this back to, because I need to do the worst day possible. That's the way that number works in order for this to be realistic. Because I was basing it on this met value, but it was supposed to be 10%, roughly 10% of that if you were doing minimums. And of course, once you get up to the point where you have enough buffer, that's irrelevant. But this is a better number just because it makes money much faster and doesn't go negative. So give it a moment. Once this is done calculating, it'll show 500 and something. It should be 500 something. So I was doing 10% of that number. This one's 700 something. It's basically 10% of that number, 150, 175, 200. That is a per month cost for each one of these types of accounts. So a 50K is $50, 100K is $75, 150K is $150, 250K is $175, and a 300K is a $200. Now, I had somebody who actually asked me about using a static account which has the same drawdown as a 50K, which means how many contracts you could play. I think it's a 100K with a $2,500 drawdown. So you would need to be careful to minimize. I mean, you have to do it based on the drawdown. So if you were doing a 50 an account with a $2,500 drawdown, you could only play for the percentile, the 90th percentile. You'd only play a $2,500 account or 25 or two. I'm sorry, 2 contracts for that account. Okay, so now quickly, is there any questions about the spreadsheet? Okay. So now we're going to go through the models and the profits that they make. So this is the back testing data. So for the NM1 model, it makes 4,300 points over that time frame. This is $2 a point, which means it would be $8,680 total. These are the breakdowns of the points per model. Again, they are optimized. So if you chose a tighter profit, that your win rate would go up. Your profit total may go down, but your win rate would go up. So, and that's part of the reason why I gave you the win rate based on the actual model, because the idea is to give you what the static numbers are. But the reality again is that the win rate is relative. It has to do with your ability to either take the stop loss. And again, the way that the model works is that you can adjust your stop, or the way that the extension works is you can adjust your stop. So theoretically, or your exit. So theoretically, you could get more points rather than the 30 points, and get even more points than that. So it's a matter of how you trade with it. So that is the NM1 model. We're going to go to the NM4 model. Now, I had already run this, so you can see 895 points. That was the calculation and all of the data that was associated with that. So 8,095 points, $2 a point. That's 16,000. I'm not going to do it in my head, but it's a 16,000 and change, 16,100 and change. So I found with this model, the 202 and 203 aren't really as effective on the NM4. So I just turned them off. So you make the majority of the points between the 200, the 201, the 204, and the 205. Again, I'm not going to do these for all of them. I'm just the last two I'm going to do them for is the NM8 model. This is the NQ NM8. This one makes less, but it also has a smaller drawdown. And this is what allows you to be able to trade more contracts over the same period. Again, the 202 and 203 do not work as well. I haven't found a way to optimize them to make them work better. It may be something that changes in the future, but for now, I'm just going to leave it as is. It provides the data that I need and the lower drawdown, which is what I was headed for anyway. And then this is the YM NM4. And again, these are the two models that I trade, which is the YM NM8 and NQ NM8 and the YM NM4. Those are the ones that are the best to trade with. So this one does not have any issue with all of the different trades, and it trades all of them. It gives a total of 10,557 points. The YM, and mind you, these are the micro. The YM is 50 cents a point. So it is not quite as lucrative as the other one. It would be great if it was, but unfortunately it isn't. So, but again, it works in concert. And if you go through and you turn on each one of these, they're all worse than these two together, which is the reason why I have those two together. So the last piece that I wanted to go through is that Marketscore, and this is more about Marketscore itself versus just the extension, has other things that it provides than just the data of the market. It also provides what are called Globex trades, which has to do with when there is a certain amount of heavy pressure at the end of the day, or a trend at the end of the day, and the numbers are high enough, it can give you an indication that there is a desire of the market to go in a certain direction. And then there's what's called a pressure fake out, and it's where you start the day and there's only one new high on one side or the other. And I apologize for flipping back, but we're just going to go through that. So now I'm going to show you a video of how you install the Chrome extension. I'm not sure why it's being difficult, but whatever. Okay, so you go to the Chrome extensions, you turn on what's called developer mode. I will explain all this after. You load the extension into I'm going to just give you an idea of how easy it is to install the extension and work with it. It loads the extension. The extension is now active. You have to pin it, or it's better to pin it because then you get the visibility. So right now it's gray. That means the extension is not active. When you first log into Tradevate, it will give you this notification telling you need to set it up. It logs into the account, and then you would go in and set up the Tradevate extension. which you will have a username, which will be your email address, and a key. Right now, it's going to give the key that it's going to give is obviously a fake one, but it will be different for you when you're actually installing it. You turn on the account, you select the account from the list, and then you type in the models. Right now, it's typed in. I will make it so that you could click it, pick the models. It's for right now. I'm just trying to get the ability for it to be usable. And then you pick the number of contracts, you save it, you're done. That's it. And then you go in and you have to download or you have to install the workspace. And once the workspace is installed, and I will tell you really quickly, once the workspace is installed, you will go in and have to set up the ATMs, which are down here at the bottom. They aren't automatically set, and you have to set them in order for it to work. The way that this thing works is it uses the different DOMs to determine which trade it's taking and just gets into that trade. So I'm going to, now you'll see that it is green. Oh, I'm sorry. You'll see that it is gray, and then it will turn green. There it goes. Now green means it's connected to the server. Then you'll see in a moment, it will take a trade. It'll take a moment for it to happen just because I had to jump through a few hoops to make this work. But it will take a trade, and you'll see that I didn't use the mouse. I didn't click anything. It just takes the trade on the back end. And then once it is in the trade, it does whatever trade. I mean, it gets into whatever trade it was supposed to have gotten into, and then you'll see the close the trade, just because the idea was to give you an idea of how this would work. So it should get into a trade here in a moment. By the way, there are a few people in this call who've been using the extension for a couple of weeks. So right there, it got into the trade. It's in a short, and then right there, it closed the trade. Now, you can see when it gets into the trade, that it gets into two contracts. Okay, you can see it is in two contracts from the level of 23,123.5. You can also see that when the page is loaded, it'll take a moment. When the page is loaded, it loads and it has a quantity of 1, and on its own, it changes to quantity of 2. So again, this is all part of the extension with what you do in the setup and how it works. I'm going to show you my page. So this is my account. This is the same plugin you guys have, or you guys saw. The other thing I did not show in the video is that this shows the status of all of these windows, and you can go in and turn off, and that tells you that it won't. This one is actually now not taking these trades. You can turn it on and off. If it was disconnected from the server, so this is still connected to the server. If it was disconnected to the server, but you still had it turned on your side, it would be red-green versus green-red. And then if it was just red, that means that it's disconnected and it's turned off. So just to give you an idea. But these are, I mean, and it will save through. So if I refresh this, you'll see that the extension still holds the data. It's based on how it's set up, and then it retains that information forever. Well, until you uninstall it or something. And then the other thing is if you're doing multiple, what it is you open the first one, you'll see that it says Marketscore account 0, and then you would just open, you do a duplicate, open another one, open another one, open another one, and that is how I ended up with all of these active. And if there was a trade happening, it would be executing trades and be doing what it needs to be doing. So then we're going to go back to here. So again, these are the different models. So if you have a 50K account, it's 50 a month. 100K account, 75. 150 is 150. 175 is or I'm sorry, 250 is 175, and a 300K account is $200 a month. I am doing, because of course I'm still trying to get this launched, and I want people to actually use it. And you can see in the spreadsheet that a 60-day or a 90-day, which would give you, I believe, close to 65 days of trading, would be easily enough to qualify a 50K account. I'm doing, for right now, there's 25 spots. I'm creating a wait list because I will be launching this in October. 3 months for $75, and then the fourth month going back to the original price. But the idea is that if you want to get on the list, once you're on the list and you pay the $75, then when this launches, I will get you the extension. You will install the extension, and then you will be able to have it running and doing those trades for you. That will only be for those 25 spots. However, once it is off the ground and things are moving, then I will do multiple accounts, and it would be, you can have a full price account and then half price for the remaining accounts. So I realize I've gone through a bunch of stuff and very, very quickly. So first thing I guess I need to ask is, do you have any questions based on Marketscore itself, based on the extension, based on, I guess, anything? Are there any questions that you guys have? And you can unmute and ask questions. Don't feel like you have to only type it. Oh, I guess I should say, let me actually do something really quick. This, I have to switch to this account. No, not that account. This account. So this is the profit that this account made today. Just off the models. It traded, I think this one traded NM8 and NM8, NQNM8 and YMNM4. It traded only those two models, and that was the profit for today. So you can see, and here I'll actually pull this up just so you guys can see. So you can see it made $920. It took two trades. That was the only two trades that it took. Oh, and I guess I should pull up today. Let me actually pull today up really fast. So you can see today, it only took this first trade right here. Took that trade. It got in at, the entry on it was 2308. It actually got in at, down here, it got in at 2304, so it didn't quite hit that target, but it still managed to make it. And then it got into this trade, which was 4373. It got in at 4390. I'm sorry, 790. So, and sort of instead of 773, it got in at 790. So it actually got a better entry for that particular trade. But as you can see, both of them hit. So this is just to give you an idea of what's actually possible. So, and I have been running this for a while. I've had, I mean, good results. It's not just today. It's been working well for a while. So I'm just giving you guys information about the data. So moving back to here. Okay, so now getting back to it. Do you guys have any questions? If you send me a DM in Discord, you're on the wait list. And I will send you a Venmo to send the money to. And again, I hope you guys understand. Most of the people in here are going to know I am not here to make $1 million. My goal is to help traders. I mean, this thing has been around, and you guys can go to the YouTube and look. I have been running this stream for more than 2 years. My goal is to help you guys learn how to and do better at trading. This is not, I'm in a Discord every day, fake levels. This is not for me to make $1 million. Part of the reason, or the main reason why I have to charge, is because there's data. I currently pay about $150 a month for servers, but beyond that, there's other things that are involved, because there's prices that I have to pay on the servers for what are called reserved instances. Long story short, it ends up being about $200 to $250 total that I'm paying, and the data that you guys will be using when you're using this will obviously kick that number up. And so that's what I'm trying to cover. The reason why I'm giving 3 months is because I want you guys to have the experience of using this. and seeing if it works for you. And I will say for 3 months, $75. Not, I mean, I know that I'm paying significantly more than that just in fees for my evals. So, I mean, however you guys want to think of that, but my goal is to help you guys get better. It will launch in October, guaranteed. It will launch in October. I have it working and I have people using it. There are people in this call that use it, and if anyone wants to type how well it's been doing for them, or if they have liked it and liked how it works, mind you, it's still in beta, so it is not perfect. There was one day where it didn't actually trade, where it would have made 44.5 points. In fact, I'll show you. This day I was in Nevada and I couldn't fix the data in time. This day right here, it would have made 44.5 points if it had played. I'm glad it didn't play because I didn't get it in early enough and it would have ended up losing money. But if I had let it play with the day that I had. But I can tell you that it would have made 44.5 points if I'd had it. So it was in beta, and it again, that's part of the reason why I'm waiting until October, is I need to work out all the final bugs or the different pieces of it that are going to make it difficult for me in order for you guys to be able to use it and use it more flawlessly. I can tell you that I have the data that I download. I have not had a failed day of data download since 2022. But long story short, obviously my data provider had some slip, and that was the reason why it ended up giving that weird thing. Does it alert you, or does it trades for you? It actually gets into the trade, and if you again, so I'm going to go back to the video. That's not the video. So if you go back to the video, so watch, you'll see it automatically just get into a trade. Oh, I rewound it a little bit farther. So you'll see it get into a trade here in a moment. I think I have to fast forward a little bit more. There we go. You'll see that it will just automatically, that was it getting into a trade. That's what it would see. It's a fraction of a second, and then when it gets out of the trade, it does exactly that. There's nothing that you physically have to do other than you have to have the browser open. And you guys can see these are the browsers that I have open. I guess you guys can't. Let me actually do this. These are the browsers that I have open that I run my trader rate. So all of these are running. All of these ran today. So all of these gave or executed the trades that it was supposed to take. Go into here, and you can see the profit, the P&L. And this is the one that I was showing you guys earlier, where it only took the 2 trades. It only took those 2 trades that were from the day. Okay. Any other questions? Okay. So to answer, I can't remember who it was. Oh, Michael. So if you send me a DM in Discord, I will send you my Venmo. Again, this is a promise I'm making you. I mean, I know that the people on my Discord know that I'm reliable, but I'm just letting you know. I will have this up and ready to go by October. It will be ready to be live. Here's the other thing is that I am working on a Ninja plugin. So I will have it available for Ninja as well. I don't know if I'll have it ready by October. So that will be, if you want the Ninja plugin and you're only going to do the Ninja plugin, you will have to wait longer just because I know that that's going to take me a little bit longer to get that completely ironed out. But I'm letting you know that that is coming. So, and then you too can sit and watch. And, you know, again, it won't always make money, but when it does, it's really nice. When it doesn't, it's a little frustrating, but it is what it is. It's always nice. I mean, maybe just don't watch it. Maybe just pull it up and just leave it up. Because I'm not going to lie to you, when I'm sitting there, it's a little bit nerve-wracking at times. But knowing that I'm making the money that I make across all these accounts, and it has made money overall for everything I'm doing, it's a no-brainer. It's a no-brainer. Yep. It's a set it and forget it. Once you run it and it's running, it runs for however long. And I will also be creating an admin page so you could actually do things on your own accounts. So if you have, well, even if you have one, you'll be able to log into an admin console that will show you your account, and it will actually let you close a trade. It'll let you turn it on and off, all those kinds of things. So there will be stuff that you can do outside of that. And what I'm thinking is that it would be something you could log into on your phone, so that and it will show you if it's in a trade, but it will be something that I don't know if I'll have the phone thing set up because there's a whole layout thing that's got to be figured out. But you'll be able to actually turn it off and on, be able to tell it to get into or out of a trade. Probably not wise because it doesn't show you the chart. It wouldn't be able to show you the chart, but anyway, it would give you the ability of being able to modify it and change it. So, does anyone else have any other questions? Okay, so last thing I wanted to ask, is there anything that you guys want to see me do with this spreadsheet or have any questions about the spreadsheet? Um, Actually, let me do this really fast. So if we do a 250K count, just so you guys can see the minimum and the 75th percentile. I didn't realize I trade my 250K accounts with, I think, 2 or 3 contracts. And this is telling me I could trade it with six contracts. And I mean, that to me seems a little difficult. I can tell you that it was quite eye-opening running this. And of course, if you turn on one of the other models, then 6 contracts is too high. But it was quite eye-opening to realize that I've probably been babying them too much, or doing trading that I shouldn't have been doing it, and I probably should bring that number. I should just let this do its thing rather than me actually manually trading it. So there are things that this spreadsheet has definitely shown me. Does anyone have any questions about or want me to do anything with the spreadsheet or run some specific back testing, or want to see something specific? Any questions? All right, guys. Well, if you have any questions or you know anyone who is curious about this, let me know. And again, and keep in mind, I will try and roll this out before October, but it might take until then for me to actually get it up and running. But that I just wanted to buy myself time. But at the same time, it will either be October or sooner. That is what I will tell you. I have people running it today. I have people running it right now. I have 1, 2, 3, 4, 5, 6, 7 people who are running it other than me. So it's not just me who's running it. So that should give you an idea. And all of them are currently, well, they all made money today. I think there was one who started a little earlier or at a bad time than the rest and is currently down, but all the other accounts are up on the start, up from where they started. They are higher than where their entry or the open was. All of them are, except for there was one person who started on a day that is currently a little bit down, but everyone else is higher than their entry or higher than the original. And they've all been going since, well, pardon me, the longest any of them have been going is the week of the 11th. So that should give you an idea. Anyway, thank you very much, everyone. I appreciate your time. I will see you in the stream on Monday. Bye-bye.